Bailey Wealth Group is a premier private wealth advisory firm dedicated to helping accomplished professionals and business owners grow, protect, and strategically manage their wealth. We deliver discreet, high impact financial consulting grounded in institutional expertise and personalized with boutique level attention. Our approach goes far beyond traditional financial planning. We serve as your strategic partner, helping you organize every part of your financial life with clarity and purpose. Whether you're investing internationally, expanding your business, or building a long term real estate portfolio, Bailey Wealth Group provides the structure, strategy, and confidence to move forward.
I'm at the AC Hotel at the Profit Jumpstarters Build Wealth with Real Estate. Hi, I'm Michelle O'Connor and I'm one of the speakers here at the Build Your Wealth with Real Estate Conference. I'm partnering with Profit Jumpstarter because I believe in the vision that Keisha has and their team in terms of changing the generational wealth gap in our society here in Jamaica and by extension across the world.
And people really make money by investing in Jamaica.
Right now we have a lot of people thinking about the Airbnb aspect of stuff.
Area for you as real estate investors to pay attention to. Last year, 2022, Jamaica brought in $4.2 billion US dollars from tourism. Why is this number significant? It is the most money this island has ever generated from tourism.
So there are two ways in which Seekers Real Estate Finance actually makes money. One, of course, when we invest equity is by exiting the equity positions at unlocking the value. And I do have a couple examples that I will walk through very shortly so you get a bit more color.
Should I get in? Should I get in? Should I go on vacation? Should I go to this fancy restaurant tonight? That's depressing. Yeah. I'm sorry. I lived that life for the majority of my life and I want no parts of it. So, I don't know about y'all.
I was actually a taxi driver. And when I bought it was a $100 million. We did a valuation recently. It's now valued at $1.3 billion.
Year. Profit Jumpstarter Academy has partnered with the Ministry of Education for the rollout of the program, which will be delivered online. Keisha Bailey is the CEO of Profit Jumpstarter.
We're collaborating with the Ministry of Education to offer $31 million Jamaican in scholarships to educators to ensure that the educators learn how to build wealth so they can teach the students. They can help the parents as well. And through doing so, that's how we build a better Jamaica. That's how we build a better world as well.
Education Minister Favour Williams says this aligns with the ministry's plan to expand financial education in schools.
I am committed to incorporating a more widespread financial literacy education into our schools curriculum, to ensure that every student has the opportunity to develop these critical skills. It's not enough to excel academically. Our students must also be equipped with the knowledge and skills to navigate the financial landscape with confidence and competence.
They were both speaking at the Profit Jumpstarters Build Wealth Conference on Friday. Ms. Williams says the ministry is exploring public-private partnerships to carry out the expansion of financial education in schools.
CVMTV.com for all the bits and bobs between, at Sunrise CVM on Instagram, of course. But that's it from us. So,
Yes.
over to
Bye, guys.
the round table.
Remember, kindness is karma. Take care of yourselves and each other, okay? And keep it locked tomorrow. Yeah, what on top about today? We don't know yet. Real estate.
Money. You said the money table.
Hey, Mon, I like this table. We're not par with the next set of people. Them. Bye, guys. Mwah.
Hey guys, what a wrap we had. It's Thankful Tuesdays here at the round table. And I'm joined by Celine, Nathan, and a special guest. But just hear money, might even really know what her name is. Keisha Bailey is her CEO of Profit Jumpstarter. Happy to have you here.
Very happy to be here.
Awesome.
My favorite subject, money.
Yeah.
Mine too.
I'm not surprised. I'm just saying, but I won't say why I'm not surprised. Oh,
So whenever you even wait for say the delivery guy, come and drop off.
my gosh.
All right, so since we have a money person, we're going to see how this aligns now. So the topic for today is home ownership in Jamaica, right? Slaying the giant.
Aye.
My heart just.
Aye.
Yeah. So I will admit that I am here to do a lot of learning today. Yeah. So I want to hear directly from you, Keisha. Let's jump into the topic.
Yeah, let's jump into it.
Yeah.
How do we slay the giant?
How do we slay that giant? Should we slay the giant? Is there a time when it's not all that it's cracked up to be?
So I guess the first thing is recognizing it's not a giant.
Oh.
not a
Let's
giant.
start with that.
Okay.
Let's start with that first
Fair.
say it's not a giant because it's possible. A lot of people own homes. The question should be, how can you own your first home too?
Okay.
How can I get into the real estate game? So we have to kind of flip up the mindset a bit of, it's not impossible. It's not that, me can't own a house and me go watch everybody who own a house and me just, they just in the back room or the front room. And look, it's, all right, how can I get to own a home too? What should I be doing?
Okay.
Brilliant. So you're here to help us with those steps?
Yes.
Perfect. That's why. Perfect. So, but immediately though, Nathan and Celine, as you hear the topic, where is your mind at?
So I'll start off by saying I still think it is a giant, and here's why I'll say it's a giant. I think Jamaicans are ambitious people. So when we talk about home ownership, we're not thinking just starter homes. People want to have the dream home.
Yeah.
We watch Home and Things. We watch all of them good stuff. HGTV. All of them, man. We want those good things.
Yeah.
And then when you look at some of the house prices, and then you compare that to salaries, you start saying to yourself, well, you just said a while ago, it's possible, but what kind of possibility are you talking about? So for me, there is a slaying the giant, and it's how do you get to the dream home in a time that you feel you can still enjoy it, and it not just ends up being that you're poor. You're poor living in that dream house because by the time you got there, you couldn't really afford it, or you jumped too early to try and get it.
Or can you do it by yourself? Because
that's true.
maybe you can get to it, but you
need a few NHF contributions.
NHT. Yeah, man, National Health Fund. No, I mean, NHS can give some money if they want to, but I don't fight them. But
NHT? Or should probably thinking donors, a few donors or stuff from different persons.
Go fund me.
The thing is that Nathan is talking about dream home.
Yes.
Right. Before you get to dream home, you have to start
Yes.
somewhere,
Yes,
right? We can't just say, all right, my first home is going to be a beachfront property, 5-bedroom, overlooking the sea.
Okay.
I like the
Right?
distinction. I like
Okay,
the
so we're just
distinction.
buying something for
No, when we're
investment.
starting,
We're starting
we
with
need
an investment
shelter.
property for
Yeah, first-
ourselves, or we're just buying it just because?
Let's start with just your primary need for shelter.
Okay.
Right? We're just out there, we're renting, and we want to make that jump over into home ownership to start. And then once you start, that's how you gradually build up to the dream house.
Okay.
'Cause it's a big leap, right? Think about long jump. Everybody can jump to the end of the sand pit just like that.
True.
Right? You can't really do it. So we're starting with the starter home, which these days it's in that 20 to 30.
Hallelujah.
No, man.
It's in that 20 to $30 million range.
But let's define starter home. So is it a 1-bedroom, a studio?
That sounds like a home to me, because I'm looking at the prices and that
Depends
30
where
million,
you're
I'm like,
looking,
where?
right?
Okay.
Yeah, in the top of the top, you know, Kingston 6'8"
Right.
at 30 million is probably.
So we're not
a
looking there,
one-bedroom
no?
or so.
We're
We don't
trying
have
to-
to look
it's
there
just not
because
high
we're
right now.
starting. We
Okay.
want to just get into the real estate market.
Okay.
We're starting. So you can even find homes, depending on the parish, 15 million, right? We want to get in.
So let me ask a
Right.
question then. So you're getting at the 20 to 30 million, well, 15 to 30 million.
Yeah.
But what would payment look like for, so let's say I'm a young 20-odd-year-old young professional, just jumped in, have my entry-level job, so I'm thinking maximum I'm looking at is 120 to 180,000 in salary.
I mean, so remember, we can bring in our NHT in terms of the financing, and the NHT rates are very low.
Okay.
So we can get a piece of the mortgage from NHT, and that number keeps going up on what the NHT benefit is.
Okay.
And then now we combine that with a mortgage from the bank. The biggest hurdle for a lot of people, them never reach so far, we start thinking about NHT or getting financing is we come up with a deposit.
Yes.
Right.
Yes.
Right. Hey. That part. So you will have to have 10% of the money down. What we teach persons to do at Profit Jumpstart is we teach you how to be wealthy. And one of the assets you need to have to be wealthy is real estate.
Okay.
So coming up with that deposit now, you can either say, okay, all right, from my paycheck every month, I'm going to put aside some money. And it's simple maths, because if we need to come up with a $15 million home, we need $1.5 million for the deposit. If we need a $20 million home, we need $2 million. So then we'll work back and say, all right, when do I need this money by?
Okay.
A year and a half. Okay, how much money do I need to put aside every month to come up with the 1.5 or the 2 or even the 3 million? Divide it out.
Okay.
So that's systematic.
See, as soon as nodding,
I'm jumping in here as, I don't know if it's devil's advocate, but so I remember my dad giving me Rich Dad, Poor Dad to read growing up.
Yes.
And everything taught me that a home wasn't necessarily an asset. It's a liability, right? Because then you have to find the investment. Miss Kitty and I were talking earlier, and she talked about being house poor. You know, you've put everything you have into this place that you can't live a life
so it's
because
how
the
we
home
do
is,
it.
right, wait. And then, you know, you have all the maintenance of this home. It never goes away. It's constant, right? You have all of these fees, this insurance. By the time you pay the lawyer, that's the amount for the home itself.
So it's not just the 10%.
Right, so it's looking like a cute, it's not giant, but you're trying to make him small, but is he really?
We're going to bring him down.
And then somebody who likes to just get up and go like me, renting is suitable for me because I can get up and live wherever I want in the world without being tied down with a mortgage that I have to pay rather than getting up and leaving the month agreement that I have had.
It's how we approach it.
Okay.
I get up and go a lot. I travel a lot with this business because we teach people all over the world how to be wealthy.
Yeah, but you can't get up and go live somewhere for 5 years if you want to live in a Yemen.
Well,
So it's
no,
how you
she's
do it.
teaching
So what
people to be
happens?
wealthy, so
come in. So we think a 1 week trip on
here.
You can.
I'm sorry.
So the real estate is an asset if you are earning. Anything is an asset that earns for you. So when
passive
Robert
income,
Kiyosaki
something is
talks
coming in.
about it,
Okay.
He's talking about you living in the house but not earning. That's where it becomes the liability. But if, say we have the property, you rent out, it's a 2-bedroom, you rent out one of the room.
Right.
Or even if it's a 1-bedroom, when you fly out, you rent it out for the week.
And so money is coming in
Money
passively,
always
running.
right.
All right, fair. We can start from there then. Ever flowing.
Okay.
So you own the property, you're paying the mortgage. You can subsidize the mortgage by doing short-term rentals when you are not there.
Perfect. Celine, what have you I feel like you're doing a lot of learning like me.
I'm doing
Whereas
a lot
your
of
brain,
learning.
I can see it just going.
No, but you see, the ease at which you're explaining it,
Yes.
and she's making it sound.
Yes.
When you're out there and you've gone to the bank and you're sitting with your representative and they're telling you, first of all, why you probably can't afford the house yet.
Right.
But you're saying, yes, but I have my 10%. And then they're putting on the fees, and then there's a whole another set of fee that you haven't thought about, which is like another 10%.
Not another 10%.
Even the yearly,
like another 3 to 4.
And the
3,
yearly
4,
cost?
5%.
Because there's the tax that you're going to have to pay as a...
What,
as a
property
homeowner.
tax?
Property tax.
Hey, guys, look here. Back to rule number 1.
Okay.
It has to be an asset that earns.
Okay.
So the mindset of a change. All right, well, pay the fees.
How many people, though, Keisha, can afford to buy a house to earn from it? People are looking to live.
So we get
talk about
creative, right?
Okay.
When we're buying, what we teach people to do, all right, we're going to buy a room with a little
With a flat, or so like a play, a one
right,
room.
and I can rent out a piece of it. Right, so I can buy a 3-bedroom with a separate entrance, or I add on a side room, and I earn. It's how you do it, right? The traditional way of thinking is, I'm going to buy this 1-bedroom, I'm going to buy a studio, I'm going to buy a 1-bedroom apartment. Well, I can't really do nothing with it, but live there. And when I'm not there, it costs me because I have to pay the mortgage.
You know what's irritating? I'll be honest
What
with
think
you.
different?
People in the Caribbean have responsibility, though.
Yeah.
I feel like that's well and good for a society where the young person don't have the kind of responsibility that a Caribbean young person has. I have to help out family here and there. I have to send little brother or little sister go to school.
You have to pay for school in Jamaica.
So, you know, so I'm not just buying my little nifty apartment and put something around our back where...
But I rent there, help pay the mortgage, I can help give your brother the money.
See, and I mean,
right? So it's how we think about it. You're thinking that we have to work harder to get money.
Right.
I'm thinking, let's work smarter.
Okay.
Let's have the real estate working for us.
Right.
So we don't have to work as hard.
Okay.
Fair. Think about it. If you have 1 room or even 2 room I rent out, your brother taken care of.
Keisha, let me tell you where that irritate me, you know. So I live in a good home, you know, where I...
Share here. Real estate. Real estate means people who buy land and house and stuff. That's what real estate means.
Yes.
When you say young professionals, where we going to get the money from? Because real estate, none of expensive things.
Yeah, but one of the main things is other people's money is the best money. Right?
That's a great way to start.
So when you're thinking about real estate investing, we want to find ways to make the purchase, but we're going to leverage using the banks, using financial institutions to get the money. Because what we've seen with property prices, they keep going up. Real estate is one of those investments that always beats inflation in the long run, and that is how you build wealth. So you want to get into the real estate game sooner rather than later.
Yeah.
Whether it's land, commercial, residential, Airbnb, you want to start from a young age because that is how you're able to make those big leaps in building wealth.
Fantastic. In preparing for this, I was reading, it says real estate offers lucrative income earning, but the part I want to go to that it has grown as high as 6.4% and 2.1% in the heights of the pandemic.
Yes.
Which don't sound so sensible because you would think that people are concerned and not working and not earning right now. Maybe I will lose my job because of the pandemic. Why it gone up?
But if you drive around Kingston, you drive around Mobay and St. Anne, any parish really, you're seeing a lot of developments. You're seeing whole heap of block steel going up. So somebody's buying these properties. And the thing is, the demand is coming because Jamaica is a hot spot, right? We see all these celebrities coming, you know, sharing their stories on Instagram, and it's drawing a lot of attention to the country. Because of that now, you want to be an investor. You don't want to be on the sidelines watching and saying, boy, you know, I wish I could have did have one. You want to get in the game early so that you too can be building wealth.
All right, take me through the process. I just leave university, I get a nice little job, I start earning a little money. Take me through the process.
So you leave university, you start working. We need to start putting aside the funds for the deposit. And there are many ways that you can come up with that deposit, right? You can say every paycheck I will put aside a certain amount of money and you religiously do it, right? As you get paid, you transfer the money to a high interest savings account. You go and pile that up and come up with a deposit. And then once you have that deposit now, you start going to the banks and say, hey, I want to buy a property, help me to get that mortgage. And they will work with you to secure the rest of the money now. Put those two together, you have the amount to buy the real estate. Plus, No, we have closing costs, we have all those other costs as well we have to think about. So while the transaction is going on, you go and save, you go and put down your money aside.
Yeah, but Keish, if I just leave in a very serious way, if I just leave university, how are we going to put down for the deposit?
So it come back to the using other people's money. Some persons, depending on what you're earning when you leave university, you can be putting aside some money, right? Maybe you're still living with your parents, you don't really have that much expense, so you can afford to put aside. For other persons, it's, boy, I'm making a good salary, but I can't put aside as quickly as I would want to. These days, you can even borrow the deposit for the house.
Okay, which is what I was coming to.
Yes. So if you borrow the deposit for the house and work through your numbers with the bank, right? The bank is going to work with you. You borrow that deposit for the house. Then now, the rest of the funds, depending on how much you're earning, you can borrow now the mortgage for the balance and combine them, and you're able to buy the property using 100% of other people's money.
I'm not certain if this question is a fair one, because I guess it depends on where you want to buy the house. But for a young professional, is there an average cost you would say to someone, don't pay more than 20 million, don't pay more than 10 million?
Start a home, your first home, you want to stay within that probably 15 to 25, which hard nowadays because the prices, they are just running higher and higher. So you want to start between that 15 to 25, possibly even 30 million. You look there, but the main thing is that you have to understand the strategies when you're going into real estate, right? It's not just you see a house and you buy it. The market is now becoming more developed, and that's one of the things with our conference. We teach persons about real estate investing, because for you to make the kind of money that make you rich, you have to understand the right strategies to use, and the earlier you use them in life, the better for you.
Does it make sense for me to buy and sell? So I buy a house now and say I pay, or I build a house and it costs me 2-3 million, and then I sell it for 15-20. That makes sense?
It makes sense, but you don't really want to sell real estate, because here's the thing. With real estate, you can always use other people's money. As the value go up, you have this thing called a home equity loan. You can now pull out some of the value of the home and use it to buy a second home, and then pull out the value out of that, buy a third, fourth, fifth. It's something that can be repeated, so you don't really want to sell and come out of the game. You want to stay in the game, but continuously learn the strategies so you buy multiple properties.
Well